In this video, I will be taking out time to explain in details how I took a good buy that made me over 140 pips. If this is your first time coming across my video, don't forget to like and share, and also click the link in the description to join my trading community where I drop 1 or 2 signals once every week. Thank you. If you have ever watched any of my videos, you will understand that I respect liquidity levels when it comes to the terms of trading gold. All right, so on my screen now is a 5 minutes time frame on Xauusd. All right, so the most important thing I advocate is you should always fit your chart to screen. So don't do something like this. Don't do something like this whereby you will be viewing past price of like 2 months, 3 months ago. No, I advocate you make sure it fits your screen, probably from 12 p.m. yesterday, 6 p.m. yesterday. The chart should portray on your screen. All right, so I would have used one of my most basic way of simplifying the bias for the day, that is marking out my most recent low and most recent high. But if you can check what is going on the screen, you will discover that the price has really skyrocketed very, very fast, to the extent that even an ordinary trend line can't easily be identified. This trend line that you're seeing on the screen now is a very risky trend line. I don't advise my students working with this. So what I do is I advocate, or rather advise you applying basic liquidity concept. Example, this is a liquidity level. All right, as you can see, I believe this is a pattern. This is a liquidity level that led to price buying. So then also we have another liquidity level here. So liquidity level is a pattern. Okay, this is a liquidity pattern. That means what it simply means is the price accumulated liquidity. Okay, accumulated liquidity, then swept liquidity, then so it was the liquidity generated here. It was the liquidity generated here that led to price buying to this certain level. Okay, so what I paid my attention to was nothing different. It was same thing, applying same liquidity concept, of which I just talked about, liquidity like this, and marking out here. So my entry was focused on the liquidity that was generated here to mitigate it. So it took from within 6 a.m. in the morning to 7:30 in the morning, price already got to liquidity, sweeping below the liquidity. So immediately price took out that liquidity and didn't give me an entry. I already knew that the liquidity resting here has been taken out, and also most importantly, the early buyers that took their trade from here were automatically trapped, which were stopped out. So there is more than enough liquidity to take the price to most recent high, which is this level here. Now note that whatever happened here was to the favor of the buyers. Please, whatever happened here was to the favor of the buyers. Now, assuming I entered blindly by setting a buy limit, I see a lot of people online these days, they call themselves so traders, blah blah traders, sniper entry and the rest. It is very wrong when you are working mostly on the 5 minutes time frame trading gold, applying a buy limit. It is wrong. Okay, mostly in my strategy, TBX strategy, is very, very wrong. Now in TBX strategy, we often wait for a reaction before we answer. If you have stayed this long, kindly like and subscribe to my channel, and also do well to click the link below in the description to join my FOREX community, where I drop 1 or 2 free signals every week. Thank you. Anticipate a buy or sell. So I didn't enter the trade blindly. I waited, okay, being patient. So the action that took place, that the price broke below this level of liquidity, which would have warranted me to buy, I waited for an entry, and price didn't give me the entry. Price later went 80 pips below the entry level, clearing out every stop loss that was set here. Anybody setting buy limits telling me. So it was for the good of the buyer. So I was now ready to take my buy. So I waited for price, scale down. I scaled down to the 1 minute time frame to get my 1 minute entry, of which I'll talk about another day. I won't be talking about it now because of time. And I got my entry from here. Price came. I got my first entry here, all right, in my personal trading account, because I dedicated this week to trade my personal account, and I'll pass my accounts I'm funded on. So one of my students came to my DM and she was like, I should please help them with signals that I have not dropped signals for this all through this week. So I told her I will be dropping the signal today. So just like that, I gave another entry. Now, the action of price now, most people this was over, I believe this was over, this was over just 100 pip move. This is more than enough to close the day trading, all right? But I had to get another entry from this particular movement that just happened, of which so many people we anticipate a sell. Okay, this happened yesterday. I'm not going to go into that because of time. A lot of people we anticipate a sell because this have literally got into the 50% demand supply zone to facilitate a sell entry. Okay, but I didn't do that because I knew that the liquidity generated here in this level was more than enough to sponsor the price to get to this most recent high. So what I did was I went ahead, gave another entry. This time around, the entry was based on the 50%. If you have watched my video before, you will discover that I work with a 50% supply and demand level on structure. So this was a structure-based supply and demand 50% that I used to capture this entry. So just a quick analysis, a quick lecture on that from most recent low, from the most recent low to the most recent high, divided into two equal parts. The 50% is your 50% down is your demand zone, 50% up is your supply zone. So I applied that strategy because I already knew my bias was to an uptrend. So I got the entry here, stop loss, most recent low. Okay, most recent low. This is where the liquidity rests. So if price should come below this level, price will do what? Price will only react a little below it because that's where the liquidity rests. So my stop loss was 80 pips, which was which is the highest stop loss I've used so far this year. My TP1 was 80 pips, while my TP2 was 160 pips. All right, 160 pips. That was my final TP for my signal. Okay, my personal trade was 50 pips stop loss to attain 210 pips, okay, in profit. So we waited for close to 2-3 hours before the price finally gave us tip 1 was smashed. After like 2 hours, tip 1 was smashed. Then we later got our full trade running. So we made close to 150 after our TP1. We made over 140 pips. All right, and as I'm currently making the video, this trade is still on. It's still in profit. This trade is still in profit. All right. So what do you learn from this video? I spoke on identifying liquidity, understanding the trend. All right. I didn't work with trend line because I understood the trend. All right. People that worked with trend line today, they will definitely be stranded here. So I didn't work with trend line. I'm a trend line trader as well, but I understood the structure. All right. So I discovered this is a trap. Anybody that took a sell from here can literally make his profits from here. Yes, but if you want to take a swing from here down to this level, it's going to be a wall. Okay, you have to be more precise than that, because anybody that took a sell from here now, that took a sell from here from the retailers, will literally be liquidated by this 140 pips move. All right, so I identified my structure, understood it, Then also I looked for my most nearest liquidity to be reacted to, and I anticipated a buy from a liquidity generated from buyers being stopped, and early buyers being stopped and sellers being liquidated. As simple as that.